Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar, and welcome to the North American session. It looks like we're picking up a little bit of activity here as we head into North America. Stocks are actually spiking higher. Let's take a look at the equity markets here. You can see that the S&P is spiking back above 4,200. You know, one of the things I got to point out with the S&P, we haven't gone anywhere really in a week. I mean, all week long. I mean, if you think about it, let's just, today's the 27th. So let's go to the beginning of the week. All right. Which would be right here. Right here. Okay. Beginning of the week. This is it. It's where the week started. That is 4150, and this is 4210. This is a 60-point S&P trading range for the week. I mean, that's tight for where the markets are at right now. I mean, it's just really, really tight trading range. If you think about like, this is the entire week's worth of volatility that we've seen. I mean, it's nothing, right? So try not to get too wrapped up. And I myself, I'm trying not to get too terribly excited when I see this move higher in the S&P of, this is a good, 10, 15 point rally. And I have to take a step back sometimes and go, wow. I don't know if you guys listen to any of the interview with Alex, Mystery Trader 99. One of the things that I like when when there's people out there, they like to express their views and whatnot. I love to know who people are that are expressing their views. So it's nice to know a little bit of a backstory behind who that person is and, where they come from, blah, 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 blah. But I do appreciate his longer term views because, sometimes you have to take a step back and go, okay, like I look at the sterling, like I have a hard time being bearish, the sterling. Do you guys know I have a hard time being bearish the sterling? Even though I may not be bullish like that day.
I know why. Because it's denominated in dollars.
Oh, shut up. No, it's the sterling. I mean, look at the long-term trend in the pound. I mean, it's in a wedge and broken out, right? This is a multi-decade breakout. Sometimes you got to take a step back and go, okay, that's where we're at. So obviously I'd like to see a bigger dip in the sterling, but there's no reason like to be bearish sterling on a longer term basis right now. Right. So, looking at or listening to people like Alex, for example, it's like, I get where, I get where he's coming from and hearing his longer term view. And you do have to take that into account. Maybe it may not help you on an intraday basis when you're trying to scalp around the markets, but longer term, we do think about these types of things. And that's why I was talking to the traders in the chat room about that tweet that I sent out regarding, what the Three Gorges Dam. And that is that's something that I know it's not, something that'll happen. Like it can happen it could happen at any moment. But it's something they talk about every year, this time of year, when you get into flooding season in China. And, the reason why I tweeted about it, because obviously Global Times is tweeting about it, but it's a good reminder that things like that are just looming in the background. Because could you imagine, Steve, since you're here, since we heard you chat here, that is that's a big deal. It's a big deal. If that dam actually broke, it would kill millions of people. But the devastation it would wreak, like globally, everybody thinks it'd be like a risk-off type of event, which, I mean, people would go, "Oh my God, the horror." But you have to imagine like the aftermath of something like that. The amount of commodities that would be purchased and utilized for rebuilding in China for years to come, and to happen in like today would be crazy, because we're already dealing with a commodity shortage, supply issue, possibly inflationary cycle as it is. Could you imagine like the I guess it would be more of a deflationary type of environment it would put us in globally, as growth may slow down globally, but inflationary pressures would pick up. Could you imagine? Nuts.
Yeah.
I mean, this
I
would
have
be
a big
like
imagination, truth be told.
What's that?
I have a big imagination.
Yeah, I know. Yeah, I know. Oh, don't we all? But it's like that would be it couldn't be a worse time for something like that to happen. I mean, obviously, and then this is removing all the human lives that would be lost, which would be just an absolute disaster. But I'm just saying, from a economic standpoint, oh my God, you couldn't have a worse time for something like that to happen. And world works in a weird way. So anyway, I don't know where I'm getting on this tangent, but I got to get through the charts. So let's get into the charts. And so I can let Steve's imagination is running wild right now. And I can only imagine what he's going to say when he takes the mic. So, hey, let's, the euro dollar. Let's start with the euro. Obviously, I guess the one thing I have to think about right now is, we've been discussing the false breakout for the last couple of days above the 122.50, but more importantly, it's this trend line that's coming into play and this support. If we break that, I would imagine, like, let's put yourself in the shoes of somebody who's long from, like, let's just say last week. You bought the euro last week, looked pretty bullish. Hey, we're above the 122 level. You're long. You're establishing a long position. You're like, oh man, risk is going higher. I'm going to get long some euros. Oh, look, we broke above 122.50. Oh yeah, I'm actually going to add to my long exposure up here. And then here we are. Coming towards the end of the week. You have end of month dollars obviously catching a little bit of a bid here at the end of month, and you're like, crap. Where am I going to put my stops? If you're long from last week, well, they're going to go right here. And then you're looking at this trend line, you're looking at these lows, you're like, oh shoot, I'm not going to risk below 121.50. So I've got to imagine that below 121.50, there's got to be some stops down there. So let's put that as support. And we've been talking about it all week. It's not like, this is new. But below 121.50, we will flip from bullish to back to range. Okay, so we've got the bullish designation on for right now, but that's the risk. 122, we could write 122.50 as being resistance, but really it's 122.80, which is the 88% retracement. Again, it's end of month, end of quarter. I'm sorry, I keep saying end of quarter. It's not end of quarter. It's end of month. So just keep that in mind. We might get some volatility here. That could spike us right back to 122.50, 122.80. Who knows? Sterling continues to hold 141. Now, notice this low right here to the high. You see that? It's also the 618. 140.90 is support. We went as low as 140.90 right there. And the bias chart from yesterday, 141, the support. The low overnight was 140.91. I mean, that's pretty close. So, and then we can obviously write 140. And over here, We'll write 142 because that's seems like that's resistance. But, you know, see that trend line? That actually came into play overnight at 141.83. So, I mean, I'm going to write down I'll write down a couple things. 141.85, 142.35. Okay. I think we have to keep it in bullish. I mean, you heard some Bank of England comments today, and Prime Minister talking about reopening, blah, 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 blah. It's keeping the cable stable, or at least kind of bullish. We are in an ascending channel, so I don't think we can, ignore that. So let's just keep it on bullish for now. Ozzy still range bound, and Gregor really confirmed today that we're, forming this range. Now let's talk for a moment about. Do you guys see equities? I mean, they're holding up. I mean, we're back above 4,200 in the S&P. Right. Ozzy still can't get out of its own way. I mean, what the hell? If you're long risk right now and you keep buying the Ozzy, you have to be punching yourself in the face consistently. I mean, just as frustrating as it probably is to short the Ozzy. I mean, if you're shorting the Ozzy, you're probably punching yourself in the face too. And you're like, well, why am I fighting risk? But at the same time, if risk appetite is strong, and we're right next to the all-time highs, right off the all-time highs for the S&P, and you're buying the Aussie dollar, you're probably punching yourself in the face as well, right? So, I mean, this range is maddening, yes, but man, it's going to break soon. And when it breaks, should be good, right? So we're going to write down 78.20, 76.90, and the Kiwi. We held triangle overnight. But we're stalling here. And I think, maybe the hesitation is right now because of the dollar buying that we saw yesterday. So I'm sure, and we're going to have to put this in bullish. And we're going to actually mark up 73.50, but this is support. Actually, the lows overnight is 64, so I'm going to put 72.65. As long as that holds, we have to just keep it in bullish for now. 73.15, 73.50, 15, 50. Okay. 15, 50, 50. Okay. Amir said, this is Amir in the chat room. It doesn't matter what you do with the Aussie. You're just getting beat up left and right. It's like, how do you even trade the damn thing? Canadian. Now, I pointed this out in the chat room if you guys missed it, if you're not in the chat room. So this trend line right here, which, by the way, if you just clone that would be the channel resistance, right? Okay. Previous channel that held. So the reason why that's so important is yesterday we wrote down 121.50, right? Right. Oh no, we didn't. We wrote down 122. That's because we were challenging. We were getting up there and we're like, yeah, but really we have to get above 122. But I know I've been writing 121.50 and 122. because it would be right here. $21.50, 122 is needed for the bulls to take control. Blah. So we're gonna do 21.50, 122. Okay. And we have to just really be bearish while we're below that. Support today will be 120.40. Actually, I bet if we get down to 120.50, you should probably be a buyer down there. We're only 30 pips away, but I'll write down 40. Okay, moving right along. Dollar Swiss. Man, did I? Oh, I was like, man, did I make all my lines disappear? Look at the dollar Swiss here. We took out that trend line. That's interesting. I guess the dollar yen's moving higher, maybe because yields are breaking higher. 89.30 continues to hold. The 78% retracement has been untouched. So I'm going to write down 89.30 and then 90.80, which is the 200-day moving average. I think we've been writing that down most days, or 91 cents. I can't remember. 89.30. And we're going to put that in, I guess, while we're below the 200-day moving average. US dollar, Norwegian krona, still being capped by 840. We're above that descending trend line that continues to hold. That's at 827. Same numbers as we've been writing down all week. 842. And I think we keep this on bearish while we're below the 842 level. Dollar MEX. It's holding up better than most. Resistance 20.06, and I think that's descending every day. I think we're at 2010 at the beginning of the week, if I'm not mistaken. That 2030 is really key, and this will be 1978, and we keep that one in range, right? Dollar yen. I mean, look how I did not expect the dollar yen to actually spike up today. It must be, it's the data, the yields. I mean, here's the 10-year. Yields are moving higher today. So I guess that's what's helping the dollar yen back up towards, you guys know 109.65 is key. It's the 618 retracement. That high that day was 109.78. So I'm going to write down 109.65, 75, somewhere around there. I'm going to keep it in range. Support 108.50. Because the 55 was the low that day right here. 108.55. Keep it in range. Dollar index. Now, you guys know that we have to watch the dollar index just in case we break this downtrend line, which would be today's highs. Look at relative strength. See how we're breaking out of this this triangle in relative strength. Here, we can do it on a 4-hour. Ooh. So in the event the dollar index breaks, well, I think we got to get all the way above 90.25, but I'll write down 90.30. That's key. You have to stay bearish while we're below that, but if we break that, if we break this level, then we have to flip it to range again. The little false breakdown here, I think that's, still has people a little nervous about being short dollars. Support should be down here at 89.60 in the event we get down there. But I would say support right now. Today, intraday, let's put 89.80 first. So 89.60, 89.80, just in case we make it down there today. And then here's the S&P. Still holding up well. 42.20. Didn't we write down 41.80 yesterday? No, we wrote down 41.40. Maybe that was the day before yesterday. I think the day before yesterday, we wrote down 41.80. And then, we're testing it again and still holding it. So I'll write down 41.40. You guys can see that area, but 41.80 is also support. Let's write down 42.40 is resistance. Still bullish. Okay. And then
cracks me up every time.
Every time gets me.
Somebody's in a good mood today.
Who, me? I'm not.
I was referring to Blake.
Oh, I'm tired. I'm not in a good mood. I'm actually in a very bad mood. I'm in a bad mood, but how can you be in a good mood when you get up at the time? I have a heart. It takes me a couple hours to shake it off. Really.
It's a miracle you do it.
I tell you, it's abnormal.
It is.
It's definitely not normal. Okay, where are we at? But let's talk about gold, silver, and Bitcoin. So I have to say that silver really is sucking wind here, and I feel silly for getting squeezed out of my short right there. But it did look like it was going to go higher as gold was going higher, but then gold stopped going higher, and then anybody who's long gold is probably going to be like, okay, well, I'm long. It's fine. As long as it's above this trend line, great. And if it's above the 200-day, great. But if it drops below the 200-day, look the hell out, right? So, I'm going to write down 1845 as we have been writing down. And you got to stay bullish while you're above that 1845 or the 200-day moving average. Sure. But the failure up here above 1900's probably concerning, and 1925 is the 618. So and I'm sure silver bulls, not silver balls, silver bulls, are probably thinking, okay, well, as long as we're above this trend line, but boy, that's scary close. Right. So I know we've been adjusting the number every day, but I'm just going to write down this low now because we're almost on this trend line. But if we really break this 17, let's just call it 1720, or I said 2720. We break 2720, then you got to flip from range to bearish. So right now it's range. resistance 28.20. I think anybody who's long silver would be so happy if we got back up there again. And Bitcoin, I mean, we're back at 40,000 this morning, but 43K, as long as we're below 43,000, we have to stay bearish. And then obviously support is at 30,000. And probably if we got down, like intraday, if we got back down towards 36,000, anybody who's bearish would probably be happy about that. But, you know, is the triangle here? Is it there? Is it there? I don't know. But as long as we're below there, I think we have to remain bearish. Support intraday would be, yeah, let's just call it 36,000 roughly. So, all right, I'm done. I'm finished. Remember, end of month, end of quarter, guys, or end of month, excuse me. End of month.
Again, man.
I know I keep saying it. That's, again, for being tired. But end of month.
In 4 minutes, actually, it's going to be end of quarter.
What?
Huh?
In 4 minutes, we have the end of this quarter.
I didn't get that.
I didn't
Oh,
get it.
come on.
Which
It's a
quarter?
clock joke.
Come on, dude.
6:45.
Dude, come on.
Come on. He wanted this to be end of quarter all day long. I mean, I have to give him something.
My gosh. Your dad humor is going to be so bad in 15 years. Like your brother, your son is going to be like, kill me now. Dad humor. Well, like my kids right now, they look at me and they're like, Dad, you are so not funny. And it gets worse every year. I mean, I remember looking at my dad saying, Dad, you are a doof. And I was like, I would never be that bad. But yeah, it's your dad humor is going to be beyond horrible in 10 years. So
it's okay. I'm going to be hanging around only with dads.
Yeah, exactly. All right, guys, have a great one. I'm gonna turn it over to Steve and Stelios. Thanks, everybody. I'll see you guys on the roundup in a couple hours. Thanks, guys.
Thank you, Blake.
Sure thing, mate.
All right.
Stelios,
So we have
3 minutes. I mean, I need 3 minutes.
Okay. So
you can hold it for as long as you want.
Let me. I don't have that much to say really, but let me
start finding things.
Take your. You have the screen. Okay. A couple of things I want to mention. We did talk about Biden's $6 trillion budget plan. Basically, he wants to boost infrastructure, and it's going to be a big chunk of spending. I read somewhere it's the biggest spending since World War II or something like that in terms of sustained spending. And the U.S. is running deficits over $1 trillion every year. This can add to that. And if you look at the big picture, how is that anything?
The US is running much larger deficits, by the way.
Yeah.
But yeah.
Are you eating again?
Yeah.
So how can in the long run, how can that be anything but bad for the dollar? I guess if other countries run bigger deficits as a percent of GDP, then yes, maybe the dollar can.
Yes, but some things are not only comparative in basis, meaning. It's not that if we all run crazy deficits, it's going to be all right for everybody, right? I mean,
True.
I wish it worked like that, right? It would be great, but unfortunately, it doesn't.
In terms of the currency, but it's my view for the dollar in the medium term, and I've said this. Remember when the DXY was at 100? I think we're going a lot lower, and there's nothing to change my mind. Obviously, we can bounce. I really did think we would bounce a little bit when the dollar started spiking a little bit a couple of months ago. Excuse me. Something in my throat. But it didn't even manage to do that. So I don't see what's going to make the dollar bounce substantially, apart from positioning and sentiment going one way. So that's what the Biden is. Has announced. And the other thing we need to talk about is the Bank of England, because I know we mentioned it briefly on Face. What's his name? Vlieg. I don't know how you pronounce it, but basically one of the big doves in the Bank of England said that an early rate hike is possible if there is smooth transition from the furlough. So smooth transition back from being in lockdown and people not working back to everything in normal. That's a pretty big thing, because this guy, remember, is a dove, and he's not one of the hooks. So and he's been an advocate for negative interest rates for a while. So that's definitely pushing the pound higher, and cable is going towards 142, euro pound 86. I still think euro pound is going to test 83 to 84, which is a huge level. It's like a magnet, I think. And there I'm going to have to reconsider, but I think that's the next stop. And depending on the situation, I'm going to see which way I'm going to lean. Otherwise,
I think the euro pound does look heavy. Any way you look at it, I think the recent period was some kind of a consolidation after this move lower. So I'm in total agreement with you. I think we might be just about to break down. I mean, can even happen today if you look at the chart.
Yeah. And if you think about it, the euro has been doing pretty well, against the dollar, against other currencies. So it's not like the euro has been underperforming a lot and it's due for a bounce. If anything, it's the opposite. So I think
something, Stelio. I was having a look at all these charts, during the weekend and then again yesterday. If you look at several of the euro pairs, we talked yesterday, for example, about the euro Ozzy and the euro Kiwi as well, right? In my opinion, both in bearish consolidations. Yes, they've been rebounding recently, but so far I put all this in the context of some kind of a corrective move because the characteristics are so far corrective. Here's the euro Kiwi, which is, by the way, extremely close to testing this trend line support. Here's EuroCAD. Look at EuroCAD. And zooming out, like, check this trend
that's
line.
a lot. That's a big confluence there. Eh?
Yes. Wow. But on the other hand, we did initially rebound from there, but look at the rebound, right?
It's feeble. Yeah.
Yeah. It's, for the time being, it looks extremely weak. It's a flag, it's a pennant, depends on how you draw it, but the trend line support is, more or less the same. So I don't know. It looks to me like, this thing wants to break the downside. Look at EuroNOK. We've broken out of this channel, but look at the bigger picture here, right? I mean, it looks to me like we're just having a little bit of a corrective move. Look at Euro MXN. So yes, the euro has been strong against, a few selects, like of course the dollar.
Against commodity currencies, no, yeah.
But against commodity currencies, it looks weak across the board. True. So now the pound has been added to the list, although admittedly, and people should not forget that, right? The bigger picture in the euro pound is this, which in essence, listen, I do believe that this might end up being some kind of a big rounded top, right? But in any case, in order for us to say that this is the case, we need to see a break below 83 cents, 80 to 80. So as long as we trade below like 80 to 80, above 80 to 80, the bigger picture is like a big choppy consolidation. So in the short term, it looks bearish, but if you want to be bearish in the long term, we need to see a break below 80 to 80. That low there.
That's gonna be a great risk reward long down there, I think.
Yes, it will. But on the other hand, if we break down from there,
oh yeah.
I think all bets are off. Yeah.
Stops have to be. You said 80 to 80. I agree. I think stops have to be like 20 ticks below, something like that. Give it some space. Yeah. Anyway, you're right.
So the other thing that is doing well, actually having to do with the euro, is the euro yen, right? Euro yen extremely strong, but that is also in a big part due to the yen's weakness. Speaking of which, this is one of the things I want to talk about today. The USD yen is trying to break higher today as we speak. So I was monitoring this descending channel, that was containing this corrective move, because it does look corrective since we found that high at the end of March. And I don't know, it looks like, we might be doing the move, we might be making this move even today. Of course, an eventual break higher here in the yields is going to accelerate that move. And in my opinion, this move in yields, just compare the move higher with this, in essence, horizontal move we've had, right? There's no question about where the direction of the trend for the time being is, and it's higher. So yeah, we might spend a little bit more time. I mean, last time we talked about it, we were over there. I said we might be breaking out as we speak, or we might need a little bit more time to consolidate. But nevertheless, I do think that the next move is higher. And if you look at the 30-year yields, same deal. Somebody can even make the case that the 30-year yield has already broken out, actually, and is now back testing this little channel, right? Depends on how you draw it. So I do think yields should be moving higher as a response to the situation with inflation and all that. And USD yen should be helped by this move, and I do think that USD yen is likely to produce at least one more leg to the upside and see another higher high above the 111 high that we recently had. Next upside target, by the way, is clearly that high over there, which is at 112.23, whatever that is. Now, other than these charts, unfortunately, I do the key levels most days. We had very few key levels being broken. That simply even testifies to the market being extremely quiet since yesterday. I went over yesterday a short-term bearish scenario for the euro and bullish scenario for the dollar, and the euro, the Swissy. Blake showed the Swissy before I saw that it might be attempting to break higher. So yeah, I do think that we might see a counter trend move in FX in the short term, because at least the charts point to a possibility of something like that. Do I believe it's going to be a trend change? No, I don't believe it's going to be a trend change, even if it happens. I believe it's going to be just that. It's going to be a counter trend move, nothing more than that. And I also explained yesterday, and nothing has changed having to do with this, why there is a possibility to see another leg lower in equities. You can see this in the S&P as a possibility. You can see this in the Nasdaq as a possibility. Now, European indices remain much better bid, and to be honest, I do believe that there is a lot more value outside the US at the moment in equities. Equities are not so overvalued as they are in the US. Yes, they're mostly overvalued globally. I can make no argument against that. But comparatively speaking, I think there are still much better opportunities outside the US in emerging markets or in some of the European bourses. So I wouldn't be surprised to see a period of overperformance, right? That's it, more or less, what I had to say. So let me go through your questions and see what you.
Dimitris is asking about sterling Swissy. If you can have a look at that.
Oh yeah, absolutely. We haven't had a look at that in.
Yeah.
I don't even remember. Yeah, you can see from half. Yeah, probably last time we had a look at it, it was over there, judging from the drawings. So let's see what has transpired since. Okay. Let me see. So we've had this very healthy move higher. Now there is a question that needs to be answered here. Is this the corrective move that we're about to break higher from as we speak? Which is a very, very probable scenario. That's a most probable scenario at the moment here, in my opinion. There is another scenario. I think it's less probable that. Let me draw it in a different color, something like this. Right? So that's also a scenario. But your main case scenario should be the continuation of the trend, which would be that we might be about to break higher. Speaking of which, since we talked about the Swissy, let's also have a look at the Euro Swissy, which we haven't. I'm looking at it at least 2-3 times per week, but as you can see from the drawing, is recent. But we haven't mentioned it here. So, in my opinion, it looks like the Euro Swissy is in another consolidation. You can see it here. I mean, a very, very textbook type of pullback, right? So it looks to me like that Euro Swissy wants to continue to the upside. Now, admittedly, you know that this is a slow mover most of the times, right? So I've said it before, I'm the kind of guy, as Stelios is, that we always advocate for using low leverage or even going unleveraged if you have the luxury of having a big enough trading account. But if there is one one pair that you can more or less quote unquote safely use some leverage, it's this one, right? Why? Because there's the S&B in essence holding it in check and not allowing big moves. Somebody can easily say, but that, yeah, dude, some years ago we had like that massive move overnight. Yeah, but that massive move was due to having a floor in place, which they abandoned, right? So it was a fundamental event that, to be honest, it was to be expected. I mean, those of us that were in the field of finance and knew a little bit about the macro stuff, we knew that it was a matter of time for the S&P to abandon the floor. Now, we weren't sure how they're going to do it, if they're going to in advance say something which was very unlikely, because then the market would put more pressure and they would need to spend more money if they had to give a warning. So the alternative, which was the most probable scenario, is that at some point they would just do it, as they did, right? One morning they just let the floor go, and we had that massive move lower, which the market eventually retraced, right? So now that there is no floor in place and there is just the invisible hand of the intervening S&B just to maintain a low volatility and stable exchange rate, you shouldn't expect any real big surprises or real big um, um, fireworks here, right? And if there is to be like a strong move, it can only be to the upside in the Euro Swiss, because that's the only side that they would allow to have somewhat of a more volatile move, and not the downside, right? So in essence, by being long the Euro Swiss, you have the benefit of having the S&B, take care of you. What's your six? And as I said, this technical formation looks to me like it will eventually break to the upside, right? Now, how much of an upside we can see following that, judging from the previous consolidation that we had, you can see, I mean, we finally broke through this consolidation, and that meant that we extended from 108 to 111. Now, for other currency standards, that's not a really big move to talk about. That's why I said that trading the Swissy against, stable currencies like the euro or the pound, you can do that using some leverage. I mean, probably it's a good idea. Otherwise, you might be in the right side of the market and still not see any big return in your favor. PL, PASI, okay, the usual stuff. I'm afraid to say that not much has changed. Silver consolidating here. Listen, the upside momentum is clearly unimpressive, having to do with silver, and that, yes, leaves, as I've drawn here, Gregor mentioned it today as well, leaves some room for a pullback. Now, let me be clear, I'm not looking for something like that, right? I'm looking for something like that because we're clearly still in, let me extend this, make it a different color. Let me clone it. So I'm still looking this as, a formation like this, right? So within the context of this larger correction / consolidation, we can definitely see a pullback within this bigger formation, right? We can. But, I do think that it's a matter of time before, this happens. So yeah, some pullback might be in the cards, but I think it's going to be temporary. Now, platinum and palladium. So here is platinum. So platinum backtested this formation, got rejected, retesting this 1170 support area once again. I'm going to have to reiterate what I said many days ago. This looks like a good candidate to produce one more low before we move higher. So I wouldn't be bullish platinum in the short term, because in the medium to long term, I'm definitely bullish platinum. And here's palladium. So look, palladium almost made it to this support area. So let me just say that in my opinion, it has already likely satisfied the minimum expectations of a corrective move. You can see the RSI that has reset itself to normal levels after a period of being overbought and producing that RSI divergence. So I would be very careful with being short palladium, because there is a good chance that we've found the low, or we're not far away from a low, right? So, we drew this several days ago, and it's been playing out quite nicely. And I still believe that there is a very good chance that we're not going to see levels below 2,700 before we see more upside, right? So, respect the trend. And the exact same thing applies with copper. As you see, a very similar type of formation. We came very close to retesting a previous area of resistance. We didn't test it as we didn't in palladium yet. And look at the reaction we have so far today. So I wouldn't be surprised if that was it, right? The next couple of days should, give us more clarity. ZM.
That's Zoom, isn't it?
Yeah. Look at Zoom, how perfect it is. Yeah. No, do I need to say more? I think Zoom looks like it wants higher. So yeah, I know the COVID period is over and all that, but Zoom looks fine for the time being. Now, you want confirmation for a breakout? I would have to say roughly 340, 345. I think we break through 345 and, we're on our way. X. You see, we talked about this, what was it, a couple of days ago? I said, if you want to buy it, that is the level you're buying it, because we were exactly at support. But if we break down from there, we're going straight lower. Look at this nice rebound. Another confirmation. Look at the importance of this wedge. The trend line support has already been tested once, twice, 3 times, 4 times, 5 times. And we had been testing it for 3 consecutive days now before we got this rebound. So a nice rebound that would have worked nicely for whoever wanted to follow the trend and this important trend line support. But I will have to reiterate again, be careful here, because this formation has a huge chance of getting resolved to the downside eventually, right? So we might even see a new high incrementally or whatever. But I do think that we're not far away from seeing a deep corrective move lower back towards 16. So for the time being, nice reaction, and we do have more room to the upside. We can rally towards 30, right? So there is some upside. But I would, if the closer we get to this trend line resistance, I would be very, very, very careful. I would definitely not be holding without, some very good money management there. AA, Anonymous Alcoholics. I'm kidding, Alcoa. Yeah, we had the overthrow from this wedge. Yeah, we had the overthrow from this wedge and then a failure. I wouldn't be buying it yet. I can tell you that much. I wouldn't be buying it yet. There is a good chance that there's more downside left here. Now, if you really want to buy it, this is the bull flag I would be looking for. Because yes, there is a bull flag here, right? I'm just a little bit troubled with the overthrow from this wedge and the failure, the immediate failure. That's what makes me a little bit hesitant. Yeah, so we haven't really damaged the trend. I mean, that's not my point. I would just be a little bit cautious. This can just be a bull flag in a bull market, right? This is the main interpretation. As I said, I'm just a little bit troubled by the way we handled, this formation, first breaking higher, then failing. Puts a little bit doubt in my head if we've seen the low there. If it wasn't for that formation, I would be a lot more, optimistic that this is a small corrective move in a larger bull trend. And you know me, right? You know that I'm bullish everything that has intrinsic value, and Alcoa is producing something that has intrinsic value. So fundamentally speaking as well, I have nothing bearish to say about the business, right? The business they're in. So yeah, probably it's just another bull flag. RBLX. Let's see this. RBLX.
Roblox. My girls love that. They play all the time.
Uh-huh.
It's a gaming platform.
What kind of a gaming platform, still?
Online. And they play all sorts of games.
Yeah, this is definitely a nice bullish breakout, right? Now I'll tell you what my problem is with this. We have so little price action. One of the most important tools for technical trading is past price action, right? Because this is what gives us support resistance areas, fib retracements, fib extensions, so on and so forth. So with this company being so fresh, we don't have much to work with. I can tell you that this is a genuine bullish breakout. I can tell you that probably we're in some kind of a third wave here. So in my opinion, we should have more to go, right? So I would be bullish. But as I said, I'm a little bit skeptical because we have very little price action. 95.50 is the 161.8% extension of this pullback, so might be a target of interest. But yeah, it looks like a bullish move that has a good chance of continuing to the upside. Now, clearly, this should be very strong support if we revisit it, right? 83. So yeah, bullish above 83. There you go. Next upside target 95.50. That's the things I can tell you with what I have at the moment. EVR. Yeah, nothing has changed since the last time we had a look at it, mate. There you go. Can break both ways, but if it breaks higher, you should be on your toes because there is a good chance that that move is going to be the last one before a deeper correction, right? Now there's a chance that we just break to the downside, straight break to the downside, in which case you should, in my opinion, trust this move and you should look for a retracement back at least towards 124, if not back there towards 116. Now, if you just want to be a buyer here, you have the alternative of buying a bullish breakout, but for the reason I just explained, in my opinion, you should be very, very cautious with de-risking that trend as soon as you can. Or alternatively, you wait for a deeper pullback, which I think is a matter of time to happen, and then you can buy, with better confidence that since we've had a recent decent pullback, the market is more free to rally higher in essence. Okay.
Okay, great. Thank you, Steve. I think you've answered quite a few questions.
Yeah, there is also a question since before for Ethereum. Nothing has changed since the last time we had a look at it, and I'm going to wrap it with this. So here is Ethereum. Big chance that this is some type of a corrective move that's unfolding here, right? But very little price action for the time being for me to tell you what kind of a move this is. Here is a scenario, for example. I think, as we discussed, as I told you yesterday, and as we discussed with Gregor, I think that Bitcoin, technically speaking, has a much cleaner technical picture than Ethereum at the moment. And it definitely has a relative weakness. So if you're looking to be short, I think Bitcoin should be your preferred choice. If you're looking to be long, I would advise against it in both cases. I think that these corrective moves are not done yet, right? So I wouldn't be buying to hold yet here, even if I was a firm advocate of holding cryptocurrencies, which I'm not. But on the other hand, you know me very well. You know that I have absolutely no problem distinguishing my fundamental position with my technical position, right? Because my fundamental position is that the S&P should have been at 1/5, for example. That doesn't mean that I'm bearish. Quite the opposite. I'm actually bullish, right? So when I'm saying that I believe that we're not done selling off yet, it has nothing to do with my fundamental thesis. My fundamental thesis is just simply that I don't believe that these things have any value. That doesn't mean that the market cannot keep on value them just because it's something that has supply and demand. And as long as you believe that there is somebody that will take it off your hands for a better price, you have no reason not to keep holding it, right? So yeah, I think that cryptocurrencies are not done with this move yet. I think it's a very short-term move in comparison to the size of the move we've seen. And that tells me that most probably there is probably at least one more low missing. So I wouldn't be buying those yet. I wouldn't be buying them yet. Or at least, if I wanted to buy them because I had an intention to accumulate. So, I would be more than willing to find myself out of the money. I would be very nimble. So, I would buy, let's say I wanted to allocate, X amount in being long after this corrective move in X cryptocurrency, in Bitcoin, Ethereum, doesn't really matter that much. I would just, allocate 1/5 of the position I would want to hold here if I wanted to just, dip my toe in the water. I would definitely not go, all in and buy a full position here, hoping that we've seen the low. Technically speaking, I don't think we have. Okay. Okay, guys.
Excellent.
And girls,
thank you, Steve. Thank you, everybody.
We revisit tomorrow everything else you want to have a look at. Bye-bye, Stel. Bye-bye, everybody.